Welcome to TradeTheMBA.com. This is John. This reports for the 7th of June. Well, we had the signal from the bullish crossover here right as we based at our 2735 algo level, and we got the crossovers that we were looking for extended move on to that primary turnaround signal. And it's continued. What we were looking for would be the green crossing the cyan, which in fact it has done right over here just the other day. We're also getting a little bit of continuation right at the 50%. This is about where we thought we would be, given what we were, expecting, at least from a return point. Now becomes the critical element. We already had a positive extreme from the other day, which means back down at that 38%, 28.17 is likely going to be a retrace. It's just a matter of when there will be some fading. Now you have the steel coming down below the positive 13.5. It's got to dip all the way below the cyan before you get an actual full short signal there. But what I'd be looking for is any fade in the midterm buyers here, or seeing shorts activate at this particular point. They're just not really there. We've just had our new fund money come in for the month, so that's given enough to propel things. We're seeing, it's going to be an interesting one, whether it can move to a positive shakeout, or the first time we get a first dip in that, I think that's where we're likely to see the first significant pullback of this. And whatever peak we finally reach, we're probably going to get a good 50% of it filled back in. So that's the prospect for that. Likewise with the NASDAQ, not quite as bullish as you see from the S&P, barely reaching contact with the cyan at this particular point, though shorts just aren't interested in doing anything with this. They took their money off and more than happy with the return they got on it. Euro continues to be strong in this move, and that's just because this idea that the Fed is going to cut rates and start easing again. It's an interesting prospect given what the Fed did at the end of last year, the beginning into this year, really jacking rates up excessively and rapidly for no real reason, just to stop the economy. And did a good job. It certainly slowed things dramatically. This punctuation that we're seeing from gold, which we kind of knew was on its way from the bullish improvement that we had on our DOC red as we started to break up, even though we were in consolidation, and it's just exploded from there. It still looks pretty strong. Gosh, that cyan is way below red. You might see a little bit of softness here as the steel crossed below it, but that was an impressive move as we kind of saw that coming. But the question is, why this flight to commodities, given no particular fundamental reason? So some stuff's building behind the scenes here. From a 50K standpoint, you can see we're still within the Power Mode 2 buy configuration. It puts a stop going higher as we move along, but we've been in a pretty consistent bullish move here because we've had that steel coming from a reset position, and only recently did we get the first pops of it above the red coming back below. This would be the strongest signal that was right about here as that started to happen, but you didn't get the follow-through of cyan moving above green, and green certainly didn't dip below red. But we are at the zero level now from the peak, so we're reset from that standpoint. So despite the fact that we had the big run-up, overbought got evened out and still holding right up here. So that kind of pretty clear as far as how that looks. The 5K chart, we can see, let me just shrink that just a little bit. We had a nice brief dip down, came through, and literally started to show very strong move once the cyan dipped below red, coming off of what was a pretty decent fade without much of a reset of steel, but then it finally happened as that took place. We ended up with a little bit softer, but then boom, we had the clean transition right there. We had the steel cross, and then we ended up with strong green movement, midterm buyers as well as long-term. And we didn't get the full dip of the orange below, but it transitioned just above that 50% line, and boom, that's what led to the new highs with a little bit of fill back on positive extremes, let's see, right about there. And we just came right back right before the end of the day to fill that right in place. So all good from that standpoint. I think that we're just going to continue to ebb across here until we get some strong algo one way or another, as you saw from the daily, and that we're not really seeing an activation of shorts or anything. So it usually takes a little bit more time for bull runs to slowly work themselves up because you don't have that massive short cover that tends to give us nice, real big jumps. So we'll continue to play with what we've got here, and I still think the volatility has been excellent and very clean on what it produces for us from a broader result. As always, though, if there's something unique, I will put it up on the Skype chat. Trade well.